The prior year rule for what you pay on Medicare Part B and Part D is super confusing, and yet it is critical that you understand these numbers and how the calculation actually works so you can avoid paying thousands extra for your Medicare Part B and Part D. I'll explain that through a few scenarios, that and more coming up. If possible, you want to avoid IRMAA. IRMAA stands for Income Related Monthly Adjustment Amount. This is the surcharge that you would pay for your Medicare Part B and Part D when you're in retirement. At age 65, as long as you didn't have another qualifying event, which there aren't many, but there are a couple, if you're age 65 or older and on Medicare, what you pay for your Medicare Part B and Part D is based on your modified adjusted gross income. So your adjusted gross income plus a couple of extra things. Most people, modified adjusted gross income is the same as their adjusted gross income, but depending on your circumstances, you might need to add a few things to it. So it's based on your modified adjusted gross income, but not your modified adjusted gross income for this year, not your modified adjusted gross income for last year. It's based on the prior year. So whether you pay the normal base rate for your Medicare Part B and Part D, by the way, in 2026 is not going to be based on your income in 26 or your income in 25. It's going to be based on your modified adjusted gross income from 2024. Well, one of the things that makes this so difficult is back in 2024, when you might have had some influence on, well, should you do a Roth conversion? Should you harvest any capital gains? What about any capital losses? Oh, you're, withdrawing dollars to supplement your Social Security. Should you withdraw pre-tax and have it be taxable? Should you withdraw Roth and have it not land in your return? In 2024, when you had some influence over your modified adjusted gross income, you had no idea what these thresholds were going to be for 2026. So you have to be aware of this relationship and do some creative tax planning almost blind, like sort of having a sense, but not fully knowing. That's one of the things that makes this so complicated. Another reason this is so complicated is it's terribly confusing, as I'm just going to explain here in just a minute and show you how it actually works. And then finally, you could inadvertently find yourself, you never being subject to IRMAA, always paying the base rate, and then all of a sudden find yourself, oh, we withdrew a little extra because we were doing a house project. We took some money out of our IRA that we weren't planning on because we really didn't want to get a car loan and we were getting a new car. And all of a sudden something could happen and shoot you temporarily up above these thresholds, and then because nothing happens for 2 years, you are caught totally off guard and your budget changes completely. This is a big stressor and something you can plan around, something you can avoid to avoid paying extra for your Medicare Part B and Part D. Take a look at this. This is that threshold. This is who pays extra for their Medicare Part B and Part D, by the way, but it's just showing the Part B premium. In 2026, okay? So the base rate for your Medicare per person in 2026, $202.90. That was just announced a few weeks ago, big increase. Well, if you file an individual tax return, either because individual or married but filing separately, you're going to pay that base rate if your modified adjusted gross income from 2024, so 2 years ago, your last completed tax return, if that level was $109,000 or less, okay? So you'll pay the base rate. Married filing jointly, double that number, so $218,000. Many people find themselves below this number and you're just fine. Fantastic. But if your modified adjusted gross income is above that, for a single individual, above that up to $137,000, well, you're going to pay extra. You're going to pay $284.10, and you're not going to get anything extra. The coverage is the same. You've just got to pay more. Married filing jointly above $218,000, but below $274,000, you're going to pay that extra surcharge, an extra $82 or so. But wait, right? If your income is even higher than that, so single individuals over $137 but below $171, you're going to pay double. You're going to pay double for your Medicare for this year. $405.80 is what you'll pay per month. Married filing jointly, above $274 but below $342, you're going to pay that double. And then you can see it continues to go up from there. That's why it's so important that you understand these rules and can plan around them, because it is so costly. In addition to the reasons I said, it's confusing. It's from a couple of years ago. You could have a spike in income and not really realize that it was going to trip these triggers. You want to be aware of this and plan ahead. So to better understand it, a couple of scenarios. First scenario, say you're an individual tax filer and in 2024, you had your normal Social Security, you have a small pension, and you've got some IRA withdrawals, and you're normally well below $109,000 adjusted gross income, say around $80,000 adjusted gross income. But you sold a piece of property, and it was a property that you have had in the family for a long time. It was a second property, and there was a gain there because you've held it for a long time. And your adjusted gross income surged out of the blue in 2024 up to around $300,000. Well, that's a unique situation, but not completely out of question, right? It could happen. And that happened in 2024. You're not even thinking about this. And all of a sudden, you get a letter in December of 25, right now, at the time I'm recording this, is saying that in 2026, you're not going to pay the normal base rate that you were paying, which last year was $185. Instead, you're going to be paying $649.20 per month for your Medicare Part B for the year 2026. That's alarming. That's how this IRMAA works. Now, second scenario, say you retired in 2024 at age 62. And when you retired, the year that you retired in 2024, you were still making good income. In fact, you got a payout of your vacation benefits and so on. And for that year, your income was $250,000. In 2024, your income was $250,000. Well, now, 2026, will you be subject to IRMAA? No. Because in 2024, you were age 62. And therefore, that means in 2026, you're turning age 64, you're not yet eligible for Medicare. We get this question a lot, and this doesn't apply until you're officially on Medicare. So therefore, no IRMAA for you, even though your income is above that threshold for 2026, you're not on Medicare. Then when you do get on Medicare at age 65, in this example, that would be year 2027, what you pay for your Medicare Part B when you enroll in 2027 is going to be based on the prior year, meaning your taxes in 2025. So in this scenario for you, you've got to be hyper-focused and sensitive to what is your income, what's your adjusted gross income right now in 2025. You want to be aware, is it going to be below $109,000 for your individual tax return so that you won't pay a surcharge in 2027, even though the surcharge levels, the IRMAA levels for 2027 haven't been released yet. The only ones we know are for 2026. It's 109. Likely it could be higher out there in the future, but we don't know that yet. You've got to do the planning based on what you know right now. So that's how it works. Super confusing, but absolutely crucial that you understand it and that really your planner understands it, and you can take proactive tax measures to ensure that you avoid IRMAA when at all possible. Great news is there's a lot of strategies that can help you do that, and we've created a lot of content about those strategies to help you manage or minimize the risk that you're going to have IRMAA. Things like Roth conversions during your career or early in retirement, qualified charitable distributions, or other advanced giving strategies. That's just to name a few. Lots of content right here on the Wise Money Show channel to help you minimize or avoid IRMAA altogether, or work with your certified financial planner to find unique strategies tailored just for you. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.